Ladies and gentlemen, good day and welcome to KPR Mill Limited Q4FY22 Earnings Conference Call hosted by ICICI Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Nigam from ICICI Securities. Thank you and over to you, Mr. Nigam.
Yeah, thanks, Nirav. Hi everyone, thank you for joining us today for KPR's fourth quarter FY22 earnings conference call. We are joined today by Mr. P. Nataraj, the Managing Director of KPR Mill, Mr. Murugapan, the Chief Financial Officer, and Mr. Kandasamy, the Company Secretary. And now, without any further delay, I'll hand it over to the management.
Thank you. Very good evening to everyone. I'm Nataraj, Managing Director of KPR Mill. I welcome you all for the KPR Mill fourth quarter earnings call for the year 2022. We are glad to report a good financial result driven by solid performance from all segments during the quarter, as well as for the whole year. KPR achieved an all-time high turnover and profit after tax during the year. The textile business continues to be good. The demand for apparel products is also on the uptrend. The historical high demand for cotton resulted in spiraling its prices both at domestic and the international markets, due to which the yarn prices have also gone up. The expansion projects of garment capacity and sugar, cogen and ethanol capacity have been successfully implemented. The outstanding HR practices ensured smooth mobilization of labor for our expanded capacities. Currently, the domestic product with the FESO are sold through more than 3,000 retail stores. With the support of all stakeholders, KPR could continue the better performance. With these opening remarks, the floor is now open for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Kapil Jagasia from Edelweiss Financial Service. Please go ahead.
Congratulations on good set of numbers, sir. Sir, firstly, can you help us with your production numbers for yarn, garment, and sugar and ethanol?
Yarn 21,185, fabric 6,000, garments 34 million, sugar 1,22,000 tons, ethanol 115 lakh liters.
Okay, and likewise the volume numbers?
Yeah, yarn 489 crore, fabric 86 crore, garments 593 crore, sugar 144 crores, ethanol 55 crore.
Okay, sir. Earlier you were getting the production numbers, right?
Yeah, production and the sale.
Okay, and the volume numbers would be?
Volume you are asking?
Yeah, volume.
Yeah, yarn 14,000 tons, fabric 2,200 tons, garment 38 million, sugar 45,000, ethanol 88 lakh liters.
Okay, so garment, we have achieved, significant numbers this quarter, 38 million, like 38 million pieces, right?
Yeah. The garment sales during the quarter is little higher than the previous quarter because last quarter we had some container issues, no? Those stocks are also cleared during this quarter.
Okay, so going forward, there won't be any issues with container shortage?
Some small disturbance are there, but we feel we can manage it. Hello? Hello?
So one moment. The line for the participant dropped. We move to the next participant.
Okay.
The next question is from the line of Birla Burma.
Hello, sir. Good afternoon, and congratulations on the good set of numbers. Sir, first is sir, from the new capacity, if I see you have produced around 124 million pieces in this financial year of garments, and you have a 115 million capacity, and there is a new capacity addition, right, sir? So from the new capacity, how much you have produced in this financial year, and how much ramp up happened? This is my first question.
The ramp up is about 25% now. Not significant production happened during the quarter, so small production happened. It was added into the production, sir.
So how you have produced 124 million garments, sir? That's a huge number.
124 million garments is basically the capacity is measured in the basic garments, basic t-shirts. When we are doing something else, some small plain garments kind of a thing, the quantity will go up.
Okay, fine. That's fine. And sir, what would be your order book in garments now?
It's about 900 crores now.
900 crores. Okay. And sir, on the sugar ethanol segment in the new capacity, is it now at full capacity? I mean, has it been totally operational also? What is the status of that?
Can you come again, sir?
I mean, sir, the new capacity that you have added, the sugar ethanol capacity. Is it,
we have commissioned the sugar power plant during the March. We are commissioning the ethanol plant in this quarter.
Okay. Thank you, sir. I will come back in the queue, sir.
Thank you.
Thank you. The next question is from the line of Mulesh Savla from Shayan Savla LLP. Please go ahead.
Thanks for taking my question, and congratulations on a good set of numbers, sir. My question is in continuation with one of the previous question, where you said that because of container problem, the garment sale of previous quarter was shifted to the current quarter. And when I look at the export numbers, our export in the overall revenue has come down from 65% to 62%. So how do you read that number, sir?
Sir, can you come again?
See, our export has come down in the overall revenue. Previously,
that is not depending on the percentage wise. You cannot calculate. If you look at the total exports of garments during the year is about 1,876 crores.
1,876 crore. Okay.
Yeah. So it is it's almost 30% more than the previous year.
Okay. So maybe because our sugar and ethanol division has started contributing more, and that can be one of the reason for increase in the domestic sale?
Yeah, that is. Domestic sale has gone up because of the sugar business and the increase in the yarn realization.
Oh, okay. And sir, how much is the cotton stock with us? As we have noticed that in the recent past, government has reduced the import duty on the cotton. Will it have any impact on our valuation?
Sir, currently we are carrying cotton stock of about 3 months. And import duties actually did not have much of impact because it was removed after the season. So the whatever duty has been removed, it had did not have an impact, but the price was increased due to that.
So basically, we may not expect any reduction in the closing stock valuation in coming quarters.
Yeah, price may not go down, but only benefit happened was the availability of cotton has increased.
Okay, so that's a good part for the industry as a whole.
Yeah, yeah.
All right, sir. So that's all from my side. Wish you all the very best. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Chairag Sidhwa from ICICI Securities. Please go ahead.
Yeah. Thank you, sir, for the opportunity, and congratulations for a very good set of numbers. So my first question pertains in terms of CapEx. So we had charted out a CapEx worth to be 750 crores towards garmenting and sugar division. And if I'm not wrong, we had already incurred 235 crores in the previous year itself, and the balance 500 crores was supposed to be incurred this year. But sir, when I see the cash flow statement, the CapEx which I can see is close to around 890 crores. So why is it significantly higher? Can you throw some light on the same? What is included in that 890 crore CapEx?
Sir, your line is not very clear. Can you come again?
Sir, when I see the cash flow statement for this year, it is showing me CapEx worth rupees 890 crores, which is significantly higher than what we were expecting, close to 570 crores. So can you throw some light on the same? What does this CapEx include about 890 crores?
We have done two projects. No, one is on garment project. Another one is sugar and apparels.
Correct, sir. But that was 750 crores.
So that was together. We have estimated somewhere around 800 crores. Okay. Since we have done some modernization in the plant, it has gone up to 900 crores.
Okay. Okay. And sir, CapEx number for this year, any major CapEx coming up in FY23?
Sir, we are in the process of ramping up the existing projects, whatever we have completed recently. We will decide the further CapEx during this year.
Okay, so ballpark will be our modernization maintenance, which is close to 100 to 150 crores one should consider for this year, if no major CapEx is announced.
Yeah, modernization generally happens in the existing mills, both garment and textile. That will continue. That will be somewhere around 100 to 150 crores will be there.
Okay. And sir, the other question pertains to the cotton inventory which we have for the next 3 months. What will be the average costing for the cotton inventory which we have currently?
Somewhere around 85,000 rupees.
85. Okay. Okay, sir. Thank you, sir, for that.
Thank you.
Thank you. Next question is from the line of Sunil Kothari from Unique Portfolio Management Service. Please go ahead.
Thanks for opportunity. Congratulations, Mr. Nataraj and team, for such a wonderful performance for continuously doing every year. Sir, my question. Thank you. Sir, my question is year on year. I'm talking about full year yarn realization, which has gone up from around 220 to 302, roughly 80 rupees per kg higher realization compared to last year. And our garment realization per piece has gone up from just 5 rupees, which is 154 compared to last year's 149. So I would like to understand, sir, this to compensate for this higher raw material cost, which is cotton, yarn, and fabric. What type of price increase we are taking with new customer or new orders, and which are the price which we are expecting to get? I mean, what type of percentage increase in a garment realization should compensate for this higher price of yarn and fabric?
Sir, actually, the garment prices are fixed based on the current yarn prices. Whatever yarn prices prevailing during the time, we have taken it as input cost, and the prices are arrived, and the negotiation will happen. Generally, whatever the yarn prices is there, that will be passed on to the customers.
Right. So, sir, that is what I'm asking. Currently, last year's our average realization is 154 rupees per piece. So, currently, if we are taking order at this current 300 rupees yarn and fabric prices, What?
Yeah. We are taking the that price only. The realization little less. You would have seen, no? Number of pieces produced during the quarter is higher. That means the garments are all plain and regular garments. Because of that, the number of pieces has gone up substantially, so the realizations are less. But if you look at the value of garments exported is higher. If you look at it is about 593 crores during this quarter.
That is true, sir. What I'm trying to understand is per piece our realization for whole year is say roughly 154. So what is the current realization average?
What is the average? 154 per piece is the average realization then.
Yes,
it has included the cotton, whatever yarn price increase also, it has been recorded from that.
I'll take offline this clarification. And one more thing I would like to understand is what type of garment production target we are keeping for current year. Last year we produced 124 million. So what type of targets we have for current year?
So it's a new plant. We are trying to ramp up within 6 months' time. We hope that we will run the factory with the full capacity during the second half of the year. Somewhere around 15 to 20% growth from this level would be possible.
Great, sir. Great. Congratulations again and thanks a lot. Thank you very much.
Thank you. Next question is from the line of Naushad Chaudhary from Aditya Birla Capital. Please go ahead.
Hi. Thanks for the opportunity. A few clarification and firstly one question on this garment side, sir. As you indicated, your new capacity, you are planning to ramp it up in next 6 months. So for the future growth, do we have anything in mind in terms of expansion of garment capacity? If you want to talk about it.
Yes, sir. See, presently our attention is only to ramp up the new factory because the capacity is little large and we have to recruit the employees and train them and all these things. So our full attention is on this as well as the new plant of sugar.
Okay. So in terms of employee availability, are we comfortable in terms of the target which we had to have 5,000 people, I think, if I'm right, to be needed to for the new capacity, new garment capacity. So are we comfortable in terms of getting those number of people to the factory?
Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. So I request you to we'll move on to the next question. The next question is from the line of Manish Ostwal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. My question on the demand scenario, given the geopolitical issues and the rising input price and the end product price in inflation environment in the global economy. Recently, we saw the Gap announce their results and they cut their guidance. So, can you comment about the demand scenario, whether that has deteriorated significantly compared to the quarter gone by, and what is your outlook for the FY23 in terms of growth?
So as it is, if you look at the demand for textile products, it is expected to be good only. Because the international players like Pakistan, Sri Lanka, and other small players are all facing problems who are manufacturing garments and yarn. These people facing problems. Because of that, the Indian position has improved substantially. So the demand is expected to be good in the coming year also. And the order position is good. We are in the middle of the next season. We have an order book of about 900 crores. We are confident that it will continue. And yarn, even though the yarn prices are at a higher level, the consumption is good and there is no stock of stocks, and we continue to sell the goods at a very high.
And we'll be able to protect our margin in this environment, sir?
Yeah, normal margins are protected. We used to have a margin of about 18 to 19% in the spinning and fabric segment. We are maintaining it. And the garments also, it gives about 23% of the margin.
And lastly, one small data point, CapEx guidance for FY 2023.
Actually, we have decided only the maintenance CapEx of about 150 crores. We are not seeing any, we have not decided any further capital expenditure for the year. Once we decide, we will inform to the exchange.
130 crores, right, sir?
Sorry to interrupt you. There is a lot of disturbance coming from your line. May I request to speak to the handset?
Just a minute. Yeah, is it better?
No, there's still a bit of disturbance coming from the line.
Okay, I'll come back again.
Thank you.
Okay.
The next question is from the line of Bharat Choda from ICICI Securities. Please go ahead.
Yes. Yeah, thanks for the opportunity, sir. Could you just provide the value breakup for this yarn and fabric in the current quarter?
Yeah, you want the value?
Yeah.
Yarn is 489 crore.
Okay.
Fabric is 86 crore.
86 crore. Okay. And sir, the volumes that have been like, if you look at the yarn volumes, they appear to be lower. So is it because of the demand coming down, or have we been using more of captive for our garmenting capacity? What has been the reason for the yarn volumes sales to be lower?
Sir, it is yarn and fabric together only. If you actually, sir, our captive consumption also gone up substantially because of our own consumption. And if you look at the together, it is more or less same with the last year.
Okay. And sir, this yarn and fabric that you gave, that was for the quarter, right? 489 crores and 86 crores.
Yeah,
and for the full year, what would be that number?
Yeah, I'll tell you. Full year yarn and fabric. Yarn is 2033 crore.
2033, yeah.
And fabric is 722 crores.
722
crores.
722 crores. Okay, sir, that's it from my side. Thanks.
Thank you, sir.
Thank you. The next question is from the line of Gautaram Prabhu from Blue Lotus Capital. Please go ahead.
Hello.
Yeah, tell me.
Can you hear me, sir? Yeah, thank you for accepting my question.
Sir, sorry, can I request you to speak a little louder, please?
Yeah. Thank you for accepting my question, and congratulations for tremendous performance for this year, financial year. I'd like to ask what is
Sir,
the
sorry to interrupt you once again, but your audio is not clear.
One second. Hello.
Gautam Prabhu.
You know? Yeah.
Sir, can I request you to speak through the handset?
Yeah, right now I'm speaking through handset only. Is it clear now?
Yes, sir. Yes, sir. Thank you.
Yeah. So may I know what percentage of the revenue comes from man-made fibers or synthetic fibers, and what is your next financial year's revenue breakup from man-made fibers, and do you see any excellent opportunity for MMF for the next financial year?
Sir, we are manufacturing some small portion of man-made fiber. That will be somewhere around 5 to 10%. In the yarn and fabric segment, we are not totally into man-made fiber-based garments. We are not making. Yarn and fabric, we are doing about 10%.
Okay. And what is the many opportunities that are seen for next financial year? New opportunities.
So next year also it is going to be the same level. It's a manufacturing facility, so we expect it to be in the same level.
Thank you, sir.
Thank you. The next question is from the line of Kapil Jagasia from Edelweiss Financial Service. Please go ahead.
Thank you for the follow-up, sir. Sir, there was a news article regarding this FTA signing up with Australia, and I suppose we have a good 14-15% from this region. So, would we be setting up more base over there? How beneficial that would be? Can you just put some color on this?
Sir, the FTA has been signed with Australia and the Middle East. We hope that it will help us because our share to Australia is about 15%. So this will enable us to increase our trade with Australia.
Okay, and in terms of realization, how, if we compare that with Europe and US, the realization or the order shipment, that would be higher? How it would be comparable to those regions?
So the realizations more or less, we are into this basic and regular garment segment. The realization would be more or less equal in all the zones, like Europe, US, Australia, and Asia. And all.
Okay. And sir, regarding this Dubai FTA, are we looking to set up any base there? Any incremental?
No, we will be exporting to Dubai. We are not planning to set up a base there.
Okay. And sir, could you just help me with your segmental margins for the quarter? Yarn, garment, sugar and ethanol.
Yarn and fabric is 18%.
Okay.
Garment 25%. Sugar 28%.
That's helpful, sir. Thank you so much.
Thanks.
Thank you. The next question is from the line of Alpesh Thakkar from Antique Stock Broking Limited. Please go ahead.
Yeah, thank you for the opportunity and congratulations for a good set of numbers, sir. So my question is more from the industry perspective. For the months, cotton prices have increased significantly, but the yarn spreads have come down, indicating that the yarn prices are not moving in sync with the cotton price. So what are your takes? So is it industry is not able to pass on the cotton price increase to the end consumer? And the second is, how is the situation for us? Are we able to pass on the full increase in cotton to our consumer, to our clients? So that is my first question.
Sir, if you see, last 1 year, when the cotton prices increases, yarn price also moved even little higher than the cotton price. Suppose 6 months before, if you see that, cotton price has gone up, say 30%, the yarn price increased to 40%, so like that. So after a certain period, you see this cotton price continue to move up, whereas at a certain stage, yarn price was it was increasing. Till date, yarn price was increasing, but it compared to cotton, it has slowed down. So almost as on today, if you see, we have come into the old, that is 2 years back, what was the parity? So that level. But that we can say in the last 1.5 years, 1.5 years to 2 years, the margin, we have able to get a better margin than the regular in the last 1.5 years. So the present situation is almost, it becomes the normal, business cycle. Because of the cotton price increase is a little higher than the yarn price in the last 3-4 months. So, but when you take only the last 3 months, if you see that the cotton price has gone up than the yarn price. But before that, if you see that the yarn price was much higher than the cotton price. So in an average, we are in the back to the square, same level now. So from this point, next 6 months is crucial because the cotton season starts by October. So next 6 months, where the cotton price will stand. So that is only then everyone is eagerly looking at it. So this is the current question.
Got it. Thanks for the clarification. That's it from my side. Thank you.
Thank you. The next question is from the line of Sakshi Goenka from Alchemy Capital. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. Sorry, I missed your segmental margins. If you could repeat it again.
Yeah. Yarn and fabric 18%. Garment 25%. Sugar 28%.
So 23%?
28%.
28%. Okay, great, sir. Thank you so much, sir.
Thank you. Next question is from the line of Akshay Cheda from Canara Robeco Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, my first question is on this order book. So, hello.
Sir, sorry, you're not audible. Can I request you to speak louder?
Hello. Hello. Yeah, am I audible now?
Tell me, madam.
Sir, just on this order book, so now currently
it's about 900 crores as of now.
Sir, how do you see the demand? Because at least it has softened little, because in the previous quarter we were at 1,000 crore and now we are at 900 crores. So how do you see the overall demand? I mean, how should we look at it? Because especially when we are in the process to ramp up the capacity, so shouldn't our order book expand quarter on quarter? So that was my first question.
Sir, actually order book is a two-cycle process. Generally, June, July, August, we will get the first set of orders, and the second set of orders we used to get it in sometime January, February, March. So during this time, order book will be higher. Now we are in the next, we are approaching the next cycle. So during this cycle, the order book little lower only. Actually, if you look at it, historically, it is the highest order book during March.
Okay. And sir, what was the garment margin? Is it 25%?
Correct.
So any reason here why the garment margins have come softening? Because in the last quarter we were guiding for a 29% and that's what we had delivered. But now we are at 25%. So how should we see the stable margins in this business going forward?
So the stable margin will be somewhere around the 23 to 25% kind of a margin. This is sustainable in this garment business.
Okay. And sir, any reason for the softness from 29 to 25?
It is because of the higher fluctuation in the yarn prices in the last quarter yielded more profit. This quarter, more or less, the yarn prices also stabilized, so the margins are also in the normal levels.
Okay, sir. Thank you.
Thank you. Next question is from the line of Kashyap Javeri from MK Investment Managers. Please go ahead. Kashyap, may I request you to unmute your line from your side and go with the question, please?
Hello.
Go ahead.
Am I audible?
Yes, sir, you're audible.
Yeah. Sir, my question is, can you help me with, the capacities across businesses that would be available for FY23, let's say in terms of yarn, fabric, garment, sugar, and ethanol?
Sir, the yarn is 1 lakh tons.
Okay.
Fabric 40,000 tons.
Okay.
Garments 157 million.
Including the new expansion.
Including new expansion.
Okay.
Sugar 20,000 TCD.
Okay.
Ethanol.
And ethanol?
350,000 liters.
3 lakh?
50,000 liters per day.
Per day. Okay. And out of these 100,000 tons of yarn and 4,000 tons of fabric, how much would be internal use?
Sir, the yarn, as you see, 40% goes to fabric. Out of the fabric, we will consume about 50% to our own consumption.
Okay. And whatever we use in garment, more or less we are insourcing only, right?
Sir?
In terms of our garment manufacturing, how much do we buy from outside in terms of fabric?
Mostly our fabric only, sir. There is no outside buying.
Okay. And I understand that, today, yarn to cotton, cotton to yarn, can you help me in terms of, let's say, margins per kg, cotton to yarn? What are the margins per kg?
Sir, per kg margin is difficult because various counts are there. We are manufacturing from 20s count to 40s count. Each will have a different margin.
Okay. Sure, sir. That's it from my side. Thank you.
Yeah.
Yes, sir. That's it from my side.
Thank you.
The next question is from the line of Hemang from Annual Share and Stock Broking. Please go ahead.
Hello.
Yeah.
Yeah, sir. Congratulations for the great set of numbers. I just wanted to know about the cotton scenario of India, like how the arrivals looks like, and is there any holding of the inventory by the stockist or some big guys, or how the basically cotton arrival will look like for a month of May and June actually?
Sir, now you see the cotton season almost over, so it starts by October and end by March. And whatever the stocks available only coming into the market, and because of the high price, there will be some holding back of the stocks from all the the community, from say like from farmers, ginners, as well as traders, and something with the mills also. So so we hope that there is some stock, but the data is not clear whether the stock is available enough quantity to meet the demand for the rest of the period, so till October. So that is only the big question. Even the official numbers also not able to get it clearly. And say every segment or even the various associations also collecting data, but various associations data is also not equal. It's only getting different numbers. The reason is that in India we don't have the correct information or the correct data. So that is a big issue. In fact, this is also one. This is a very negative feedback to fuel the price hike. So this generally happens in India, and because of this year, only the thing never happened in the last 10-15 years. They imposing the import duty for cotton. Only last year the cotton duty, the 10% plus 1% surcharge, totally 11% duty imposed on cotton. So otherwise every year, whenever the cotton shortage or during off season, mills normally go for import. And this year mills are not able to import because of the duty, because 11% we add with the cost, it will be very high. So that's why everyone has to buy only the domestic market. So this added the fuel to the cotton price. So as on today, some people say that cotton is available. Some people they say that cotton may not be available during the end of the season. Maybe last 1 month or 1.5 months, so like that. So this is only a market information or rumor or something like, and it's difficult to predict. And however, now the government has removed the duty, though the price is high. The other door is open, so even at a higher price, mills can import. So this is a very big advantage. So at the end of the season, if cotton is not available, then we can go for import. So this is the position, sir.
Okay, sir. Thank you very much. Thank you for the answer, sir.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Sir, thank you for the opportunity. Sir, my question is on the margin. So can we say that the margins that we saw, the heightened margins in the last 2-3 quarters, now the margins going forward would be back to normal, like the yarn would be 17-18%, garment would be around 25%, and sugar ethanol around 25%? Can we say that, sir?
Yeah, you are right.
Okay, so we are back to normal. Okay, fine. That is. Second question is on that, just clarification. Did you say that the capex that we assume 750 crore capex, there is some cost escalation and total cost incurred is 900 crore?
Not because of that, sir. We have done some modernization in the plant. Like what we have done is originally plant machine was a little modernized, and some modification has been done in the plant that resulted in 100 crore increase in the project cost.
Okay. And number of FY20.
Sorry, your voice is breaking.
In FY23, since things are back to normal in terms of margin, and we have also capacity fully operational, what would be the revenue guidance for and PAT guidance for FY23, sir? Just ballpark number.
Yeah, we are looking at a growth of about 15 to 20%
in revenue.
Revenue.
And PAT?
PAT we have to wait, sir, because the cotton prices are volatile. We have to wait for some time to ascertain. We hope that the things will be good, but we could not be able to give the.
So the margins could go down or up depending on the cotton prices.
Go up also is possible. Both the sides is possible. We have to wait for little.
Okay. Thank you, sir. Thank you, sir. Thank you, sir. Thanks.
Thank you. Next question is from the line of Apurva from PGIM India Mutual Fund. Please go ahead.
Good evening, sir. Thank you for the opportunity. Sorry, there was some disturbance on my side, on my line. Just wanted to, I don't know whether you've answered this. How much stock of cotton are we holding in terms of, say, number of months going ahead, and what would be the average?
About 3 months stock we are holding.
And average pricing, are you disclosing?
Somewhere around 80,000 to 85,000, sir.
Okay, 80 to 85,000. And so, in terms of, again, as in the yarn prices you mentioned, they have come back, right? So, are we seeing a spread of around 120 to 130 rupees as of now, at least, or cotton yarn spread?
Yeah. The year margin is about 17%. The gross margin would be little higher. 120 rupees would be there.
Okay. Okay. So, anyways, you have highlighted. In terms of, again, coming back to CAPEX, already you said now it would be more or less, and you would be deciding in the coming year. But any initial thoughts on where would this be, because you would have that kind of free cash flow. So, any color on that?
Sir, CAPEX, we are planning, continue to expand in garments only. That is our plan. So that's why we told that, already we have 2 projects. Almost, the project is completed, but ramping up as well as in the sugar also, like, some other work is also like, being the first season, we have to, set right everything in a proper way so that teams are fully engaged in this, all the technical team. So that's why I told that maybe after 6 months we will think of for the next project. So here, our next project, will be expansion will be in the garments.
Garments only. Fine. And just to, again, just on to summarize, because I couldn't get it properly, just again, the demand side there is not a problem since you are expecting a 15 to 20% growth. It is where the raw material input, that is the only issue right now that you're seeing. At least am I audible?
Yes.
Sir, we could not be able to hear you.
Am I audible now?
Yes, now it's better than before.
Yeah.
Yeah, so just, just I couldn't hear it properly. Just summarizing in terms of demand side, you don't see challenge. It is more on the raw material and the cotton pricing side, right? That is what you have mentioned, right? Sure. Thanks for the opportunity.
Thank you.
Thank you. The next question is from the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah. So just 2 questions from me. One, when should we expect full ramp up for the new garment capacity? Should we expect around December or so?
Yeah, somewhere in third quarter of this year, sir.
Okay. And have there been any negotiations or attempts, to just speak to the clients to go in for, say, a 3-month price hike arrangement instead of, I think, a 6-month arrangement now?
Sir, it is ongoing process, sir. Generally, we will discuss with the client regularly. And some of the new orders, whatever they place, repeat orders and all, they will give the increase in the prices. Generally, we will not negotiate for the price increase during the order period. If they give an order for 6 months, we will not negotiate it again. Because since ours is a fully integrated unit, we allocate the cotton for that purpose at that price.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah. Hello. Am I audible?
Yeah.
Yes, sir.
Yeah. Can you just brief about the FTA opportunities regarding what, because I can see it in your investor presentation as well. So how are we capitalizing on these opportunities?
Sir, this FTA is not the government has done for with UAE and Australia, and see some discussions going on with UK, and see once these things are happening, definitely there's a good opportunity, especially for the garment industry. So we have to wait and see that when these all these things, because even Australia already signed and UAE is also signed, and still we have to wait till both the parliament have to approve this FTA, and definitely and particularly KPR, we are also in the considerable export is happening to Australian market. And definitely it will be a very boost for the KPR in the apparel division. So we are very eagerly waiting for this to happen.
Okay. Thanks a lot. And one more. So your inventory has gone up. So is it like the nature of industry or what is it?
Inventory basically gone up because of price increase, the cotton price increase.
Okay. Thank you.
Thank you. Next question is from the line of Dipen Seth from Bhuvan Capital. Please go ahead.
Hi, thanks for the opportunity. I hope you can hear me.
Yes, sir.
All right. So I'm trying to reconcile two numbers in your PL for the full year, sir, with the business developments and metrics that have played out. So one is, of course, that I've been tracking your HR policies and capabilities for close to a decade and actually more now. And they rank right up there at the top in the textile industry, and we've heard plenty about them, and I've had the opportunity to check them out as well. Now, this particular year, total employee expenses have risen by a mere some 12.5-13%. Whereas I think the most labor-intensive part of your business, which is garments, has seen 30-35% increase in volumes. So how do I reconcile, this hardly 12-13% kind of change with the huge jump in garments? Is it that there is more machinery / automation / whatever? Is that the way to see it, or is there a point that I'm missing here?
Sir, actually the revenue has jumped because of the raw material price increase. So the percentage of the expenses is showing little less. If you look at the actual salary expenditure, it is higher.
So actually, I'm looking at the actual numbers, sir, not the percentage to revenues. It's 393.68 crores last full year, and it is just 445.45 crores this year. Now that's about a 12-13% absolute increase, and I'm comparing that with the garment sales in terms of number of garments, not even value, which I suppose has got inflated because of the underlying cotton price increase, which has gone from 93 million garments to about 120 odd million garments, right?
Yeah, the garment production, sir, it is not a standard garment. Garment is different from one period to another period. If it is it's a plain garment, number of garments will go up. If it is a printed garment or an embroidery garment or a double piece garment, number of pieces will go. That will not be. You cannot use it as a yardstick for this purpose. Basically, there is no much of a employee increase during the year. Full year, no. We have constructed a new factory. We are starting recruiting people, a very small number of people for the new project.
Okay. So is it fair to assume or interpret this as the fact that your garment mix this year was perhaps less labor intensive than last year?
Not like that. Labor intensive only, but in the garment, if you look at style of the garment is different this year.
Yeah, so maybe it consumed lesser labor. Okay, and the second number which I was trying to reconcile in the PL was the actually, again in absolute numbers, your depreciation provision for the year has fallen in a year where you have aggressively invested in capacity. So is there a change in policy or something here?
No, sir. Both the projects were completed during the month of March only. So the depreciation provided, and also some of the machineries have completed their useful life. 10 years has gone because of that. It is little less. Next year the depreciation will go up because the full year utilization will come.
Right, I understand. Thank you, sir. Thanks for the opportunity.
Thank you. Next question is from the line of Naushad Chaudhary from Aditya Birla Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again. Just a clarification on the order book side, sir, as sequentially it has slightly gone down from 1,000 crore run rate to 900. So is this something which is a peak run rate given the existing capacity we have, or is there any scope for an order book to increase on the existing capacity?
So the order cycle is in a year is 2 times. So once in 6 months we will get the order. So the order period is somewhere in June. We will get the June, July. We will get the first order, and we will get the second order sometime in January, February. It is in middle of the season now, so the order book would be little lesser only. If you look at it, it is a historically higher order book during March. So the order book will be order book cycle under the financial year is little different.
Okay, understood. Secondly, on the balance sheet side, sir, as one of the participants had asked in terms of inventory days, which has gone up. If I look at the history also in last 2-3 years, it has gone up meaningfully. And the reason you shared the raw material prices. Is there any other piece of it apart from the raw material prices?
There will be some increase in stocks in the sugar division also because we have commissioned the production during the year in the new plant. So that also resulted in little higher inventory.
Historically, it used to be between 75 to 85 days. Do you think we can, once things get normalized, we can go back to those run rate? And as the duty also has been on import duty on the cotton has been removed, so that way we can have lesser inventory, and if required we can have import of that. Will these points help us to reduce our inventory days?
Yes, definitely it will help us because when there is no import, we forced to buy more cotton and store it. Even though we have having 3 months stock, and the prices are very high because of if you compare to the last year, it is more or less double the price. So the inventory cost has gone up substantially. That's one thing. Second is in the consolidated level, the inventory is higher because of the sugar also. Sugar also contributed to a certain extent. Because sugar you cannot sell it. It is a regulatory product. You can sell based on the government release order only. So whatever we produce, it will be laying in the stock only.
Okay, and lastly, I'm sorry if I missed this point. The recent greenfield expansion of sugar and ethanol, by when we see the full capacity utilization?
Sir, for first quarter we will start the plant. Maybe by end of this quarter we can see the full production.
Okay, perfect. So FY23 will see the full benefit of this.
Yeah, more or less full kind of. It's about 90% benefit we can see.
With 25% plus a kind of EBITDA margin.
Sir, we are looking at 25 plus kind of EBITDA margin for the sugar business for the year 2022-23. We hope that we can achieve it.
Okay. Thank you so much, sir, and all the best.
Thank you.
Thank you. And now hand the conference over to Mr. Abhishek Nigam for closing comments.
Yeah, on behalf of ICICI Securities, that concludes this conference, and thank you so much for joining us, and you may now disconnect your lines.
Thank you very much. On behalf of Batliwala and Karani Securities India Private Limited, that concludes this conference. Thank you for joining us.
Excuse me?
Yes, sir.
There will be management.
Sure, sir. Please go ahead.
Yeah.
Yes. Thank you. So the improved market dynamics, positive expectation from the concluded FTAs with the UAE and Australia is a good news for the Indian apparel industry. We would like to thank all the stakeholders for their continued support, and we expect the support from all the stakeholders in the coming years also. And once again, I thank you all for attending this conference call. Thank you.
Thank you very much.
Thank you, sir.
On behalf of Batliwala and Karani Securities India Private Limited, that concludes this conference.